Hello traders, Nick Shaheen here looking at Snap. I haven't traded it in a while. Last time I did, it was beautiful. I shared it via write-ups and via video. The idea was pretty ridiculous to many, but I had conviction and it played out perfectly. I'll show you evidence of how it played out. This was a snapshot from the video, and I had hand-drawn my perspective of what could happen. Clearly, that did happen because here's reality of what happened to Snap since then. So the question here is, what next? How can I trade it next? And I will share with members on how I would trade it next. But first, I want to revisit the concept of the breakout because it comes into play going forward from here. So first of all, I'm not a permabull on Snap. In fact, I don't like the company at all. I don't like management. I don't like the idea of it. From the minute they said that they were a camera company, I just fell out of my chair. They placed themselves in competition with GoPro and every cell phone on the planet. So they put themselves in the same category as GoPro, and we know what happened to that stock. And they put themselves in competition with every cell phone on the planet. And now all the cell phones have fantastic cameras, so I'm not sure where that camera angle comes into play. Anyway, maybe he has visions down the future. That aside, the storyline was great. I don't know their fundamentals anymore. I can't remember if they make any money. They lose. Nope, they still lose money. Earnings per share is negative, and they sell about 18 times sales. So clearly, Wall Street is pricing them as if it was a growth stock, because when investors look at a growth stock, they give it leeway on the top line on profitability, so they assign it a higher valuation than something that makes sense. So it doesn't make sense. This is why people who always look for value get excited when they see valuations like that, like Chipotle, and at one point Amazon, but then they end up losing a lot of money because of the fact that they're using the wrong stick on what to measure. Until you decide that, okay, Snap is not a growth company, then you can just reassign it its value. They did that to Chipotle when it fell from grace the first time around. Okay, back to here. So early June, I want to say the 5th, I shared a video. You can go back and look at it. I'll probably put a link for it down here in the description. Before I forget, speaking of description, there's going to be a subscribe button on the end. Hit it if you're not already subscribed to the YouTube channel. It's free. So the idea was that it was somewhere around here where price was, and my goal was for it to get to 18. I had already identified this circle prior, and at the time I added this blue line here as the target, $18 to $20, and I was very public with it, and I got mocked for it. So the reason why I did it comes into play again here, like I said, and this is I believe a daily chart for 1 year's worth of data. That's not enough. So I would go to a weekly. That will give me enough data and zoom in a little bit. So the IPO went great and then fell into this descending channel that wouldn't end, right? So then it bottomed wherever the heck it bottomed, and then it started coming back up. So this is the descending yellow channel. You see it here. Pretty wide, but pretty consistent, very well defined, except for that little blip right there. So then the other set of events that were happening was that we had a nice rally that brought us back to a contention zone, which is that white rectangle right there. So whenever, and if you look, this point right here matches up perfectly with this point, whoops, and this point. So it is a pivot, and machines, people who traded here, remember they traded again. So then we had a horizontal significant zone matching up exactly with the descending channel. Thirdly, which was the most bullish of them, which is with the inverse head and shoulders. I know technicians might come out and say, dude, you made a mistake. You can't draw it this perfect. It's not perfect. I don't care. It paid. To me, when you attack a neckline and then you take that neckline out, whether a perfect inverse head and shoulders or cup and handle or whatever it is, it's going to play out. And once it played out, boom. After the fact, it looks like there's an ABC push like that too. but this was after the fact, and I didn't pay attention to it at the time. On top of it, if I zoom back into a daily, actually less than a daily, there'll be another. So here, range tightened, and I did these green lines. So there was a whole bunch of stuff going on. So let me go into 2 hours. Maybe that'll give us. I'm looking for a particular breakout. There was an earnings report somewhere. Okay, so I'm going to go to 4 hours. Maybe once they broke out of the neckline, was it back here? That's because it's past. Yeah. Okay, found it. Ha ha ha. All right, so I'm going to do this. Get rid of this beautiful picture because it is beautiful. Vindication. This one right there, this candle. Major fail on an earnings event, right? This candle failed again. So this is where the bears, the sellers, the people who say, oh, the rally's over, it's going to fail again, get excited because they failed it again. They caused it to fail again, exactly where it failed here and almost exactly where it failed there. But therein lies the opportunity. So see that blue inverse head and shoulders that had this target? There's a tiny one here. So arguably, right? So the point is, they failed, they came back to it, the bears pushed them, they failed again miserably, and they tried to push them again, only it lasted 2 candles of that time frame. And then once they broke above it, boom, off to the races. So somewhere around here, I did the video here. And I said, there's plenty of more room to go. And I shared my reasons why. And now it comes back into play. And I'm going to go back to a daily candle and share why. Because so once you break out of a neckline, and I'm going to call this the neckline here, somewhere around 12, and you revisit the neckline and you bounce off of it, you know, they say past resistance becomes forward support and vice versa. Well, here we go. Now this was resistance, they broke through it, and now it's back support again with higher lows attacking a neckline. So the exciting part is that, number one, I have a base against which I can sell puts to generate income, and I have a neckline against which I can bet upside. So if somebody doesn't want to sell puts, they can bet on the upside. Somebody that wants to do both, and they're really bullish snap, they can do that. Now the only caveat is that markets are at all-time highs, and it's pretty scary chasing at these highs. But when you're chasing something, when I'm chasing something very specific, I worry less about what the market is doing. You know, it comes into play, but I worry less about it. I didn't say I don't worry about it. I said I worry less about it. Okay, I'm trying to find another way of saying this. Okay, so right here, June of 2018, pretty decisive fail, right? So they took it out and now they held above it. They're holding above it. So as long as they can do that, the buyers are in charge. Mind you, it is entering this zone, and I'm going to extend it because this is, maybe if I go to a weekly now, we'll get more orderly. This zone right here, it's pretty, let's do it, will that do it, 250? Okay, that's good, boom. So I had it stopping here because that was a hideous ledge, right? They fell back in April of 2018 off a cliff and they never recovered. They bottomed with the market in Christmas, and then since then it's been great. But they're going back into it. Okay, so they busted above it here, but that was an overshoot. Onus is on the bulls to take it out again. So where is the exciting part? The exciting part is if we get a Santa Claus rally of some sorts, this will take it to here, but not in a straight shot. There's a big fail right there and somewhere around here. So I'll probably do this. Bear with me. It's going to look wonky, but I'll fix it after the fact. So this is not a forecast, but this is a potential scenario. I should extend it to the right, and I'll do that later. So if I do this and expect that in the next few weeks, this could happen. So I don't start long anticipating this. Usually I like to see triggers. And for that, I need lower time frames to find shorter term triggers. So I don't chase it unless I can tell myself, okay, they need to break out of 1590. This was the last fail. Otherwise, why should I buy and hope that now they're going to jump through it? Or I can sell put spreads below it to generate some income, and if I do have income from that, then I'll get ballsy and buy some calls. Or buy the shares themselves if I'm in it for the long haul. So these are not trade alerts. These are ways or ideas of what one can do. So where do I sell put spreads? So this is a 2-hour chart. This period of time in front of us, all the action was inside this zone right here, and the heaviest action was right here, 1450-ish, 25 to 50-ish. So from here to here. How do I know that? I know that from the volume profile here. If you don't know what that is, ask me about it offline. I don't want to explain it right here. I don't know how anyone can trade without this. You need to, I think every trader needs the volume profile so you know what the hell's going on. Otherwise, you're just flying blind. This will stop you from buying and selling at the wrong times, in my opinion. So I can see that there's a cluster here, which is not a surprise. That's where everybody wants to. This is technically where buyers and sellers were the most active against each other. So they, in essence, they agreed most on price. This is a very important line because of that one candle that was completely rejected on earnings. Does that a lot. So next time, short the earnings. No, anyway, the earnings spike. So I would be comfortable selling here or selling here. Depends on my time frame and my intentions personally. So this cluster here and this give me some sort of a bottom against which I can sell some stuff. I'm trying to find other time frames that matter. Okay, so this is it. This is a full look on Snapchat. The point is, I don't care about the company. In fact, I don't like the company, but I don't let that stand in my way of trading it. Some people are holistic about it, and they don't want to trade anything they don't love. Hey, that's where you get in trouble. People loved Tesla stock a couple of days ago, and they got in trouble. Shorted it a couple of days ago. We didn't get in trouble. Okay, so back to Snap. There are opportunities, but it depends on if somebody wants to jump the gun or not. I personally wouldn't buy anything until it clears this candle right there. By clearing, I mean it closes above it on the time frame you're looking at. And this is not a daily chart. This is a daily chart. So on a daily basis, if it can close above that, mind you, this is another ledge up here. This whole thing is a ledge. So it's not going to be, arguably this is a cup and handle right here. So 17 is not out of the question. I'm going to say it that way. All right, so Fibonacci guys and gals. Let's see if we can come up with anything. 50% of this is right here. I don't think it's a coincidence. So, like I said, when a rally gives half of itself back, it's not a big deal. Same here. When they drop this much and they recover 50%, that doesn't mean they're going all the way back. They could, but it doesn't mean that they're going all the way back. So, in other words, I'm saying it's okay to lose a few a few pennies here, and then round up. All right, next signing out. If I can find the off button. There it is.